This is exercise e17-10, and it says here, assume the same information as e17-9, and that Steffi Graf reports net income of in 2017 of 120, and in 2018 of 140. Total holding gains, including any realized holding gain or loss, equal 40,000 in 2018. Prepare a statement of comprehensive income for 2017 and another one with 2018, starting with net income. So what we need to do first is just take a look at what happened in when we did exercise 17.9. And there's a quick review of exercise 17.9. Here we had to prepare an adjusting entry. And the adjusting entry says, well, this is our holding gain as of December 31, 2017. This is what we had in there, which was a debit balance. And so we need to add an 1,100 fair value adjustment. And this is the adjusting entry with that debit of 1,100 fair value adjustment, which is an asset account, and a credit to AOCI, or unrealized gain on the balance sheet of 1,100. Then it says in B, it says show the balance sheet presentation of the investment related accounts at 12/31/17. Well, in the asset section we have the investments, debt investments, shown at fair value 54.5 because they are AFS securities. And then we have this accumulated other comprehensive income that's in the stockholders' equity section. It's like retained earnings, but it hasn't actually gone through the income statement, so we call it other comprehensive income. And so that's what goes on the balance sheet. In C, it says prepare the journal entry for the 2018 sale, where we sold the one set of these these securities for 15,100. It had a cost, that's this here, 17.5, that's the credit, and we record the loss as the difference. We don't do anything with the fair value adjustment except on the balance sheet dates where we do an adjusting entry. So then what we need to do is next, we know that we had this loss on the sale and this occurred in 2018. That was the fair value adjustment for the year, and it was the unrealized gain. And come back, and now we're going to record, we're going to start with this. We need to do a statement of comprehensive income for 2017 and another one for 2018, starting with net income. But I'm going to back up just a little bit, and let's start with the income statements for those years. And this is going to be Steffi Graf, Inc. Income statements for the years ended December 31, 2017 and 2018. We'll put that in there. And we'll put in here 2017 and 2018. And we have, let's put in income from continuing operations, other income or loss, and net income We're going to ignore income taxes because that's really not relevant here to the main thing that we're trying to get across. We know that net income for these 2 years is 120 and 140. So we're going to put that in here in 140. We also know, if we go back to the prior slide, so we're going to have that loss on sale, and so that our income from continuing operations for that year was going to be 137.6. We had no other income in 2017, so 120,000. Now, it's acceptable to continue on and put it, in fact, FASB is encouraging it to continue on and put your comprehensive income or other comprehensive income right on the face of the income statement. It's not popular, so not many firms are actually doing it, and they're doing a separate statement of other comprehensive income, which is actually what they're asking for. And so we're going to start with the new heading. We'll call it Steffi Graph Inc. Statement of other comprehensive income for the years ended December 31, 2017 and 2018. Okay, and remember, it starts with net income. Oh, we're going to put 2017 and 2018. We start out with net income, which is the bottom line off of the income statement. 120 and 140. That's our starting place. But let's go back and look up here. It says, and take a look at this. This is where it gets a little bit tricky. It says total holding gains, including any realized holding gain, equal 40,000 in 2018. So we have recognized this $2,400 loss. But when we recognize that $2,400 that was previously included in other comprehensive income, so in 2017 we have net income, and then we had other comprehensive income. And that was 1,100. And remember, that's from that's going to be 1,100. It also says that we have total holding gains, that's up here, including any realized holding gain, equal $40,000 in 2018. So let's put that holding gain right there. But now we've got a little bit of a problem, because that 40,000 includes this $2,400 in here. We got a problem with that because it says that's our total holding gain, 40,000. but it includes that. So what we need to do is actually reclassify that amount reclassified out of other comprehensive income and where it was a negative up here in the income statement, we need to put it as a positive down here. Because remember, the 40,000 includes any realized holding gain, well, or loss. Well, that 40,000 is real. That's right. But what we want to do is take out the effect of any realized up here, and that's what happens. And in fact, so when we add this in, we call this total comprehensive. That's bottom line is called comprehensive income. And we end up with 121,100 here. And we have 140,000, 180,000, 182,400 here. And those are comprehensive income numbers. And that's really what we were asked to do, this statement of other comprehensive income for 2017 and 2018. But it's this part here that is what, for example, Professor Mark Cussett is working on. He says it's really difficult for users of the financial statements to see when you put a loss up here and you actually add it back down here, because essentially we had we're doing a reclassification, and a lot of people don't understand that what's going on. Well, that's the way it has to happen. And there you have exercise 17-10 with the reclassification, and I hope that helps.